Without any doubt, we have had a transformational year following our listing on the London Stock Exchange last May. During this time, the profile of Essar Energy has risen very sharply amongst the international investment and business communities, who have received us very positively. Being numbered amongst the top half of the FTSE 100 list of companies means that we get a lot of scrutiny and a lot of attention. It is demanding, but during the past year, we have responded well to the challenge and moved the business forward quite considerably right across all our different divisions. For me, the highlights have included the successful flotation itself and the positive response of the investment community, which has seen our share price rise accordingly, enabling us to raise a further 550 million through issue a convertible bond last month, completing our first project, the 380 megawatt Vadinar P1 power plant, and then moving 4 other power projects into the construction phase, delivering record throughput at our Vadinar refinery, which at 14.7 million tons of crude for the year was well ahead of its nameplate capacity, bringing phase 1 of our Vadinar refinery expansion near to completion, and also nearing the finishing line on 3 power projects, all of which will come on stream in 2011. And finally, coming to an agreement with Shell, which should lead to us acquiring the Stanlow refinery in the UK this year. We are aware that we cannot stand still. We have a strong strategy and a strong program of projects. Our focus now is very firmly on delivering those.
The number that gives the best indication of how the underlying business is performing is current price EBITDA, which was up by 39% in 2010 at $704 million compared with about $507 million in 2009. The other number on which many people focus is the profit before tax, which was up 28% at $365 million ahead of analyst consensus forecasts. So it was a good financial performance. In power, availability at all our operating power plants was good and ranged between 94 and 99%. EBITDA for power was up 37% to 213.5 million, primarily due to full year operations at 85 megawatt Algoma plant in Canada. Sales under availability based tariffs and increased fixed charges at the 500 megawatt Bhandar plant at Hazira, EBITDA margins were a healthy 61%. Meanwhile, in the refining and marketing division, current price EBITDA, including sale tax, was up 39% to $499 million. There were 2 key factors to work their hair. Firstly, at our Vadinar refinery in Gujarat, on the west coast of India, there was a significant improvement in our current prices gross refinery margins, which were up 57% to $6.60 per barrel. And secondly, we increased throughput at refinery, which was at record at 14.7 million tons of the crude, or about 107 million barrels. So overall, it was a pleasing outcome in 2010. The project pipeline is now quite significant at more than $12.5 billion of investment. In power, we completed 380 megawatt Vadinar phase 1 power plant, which is the first to be finished since the IPO. In addition, we moved 4 of our developmental power projects into construction phase last November. This means that we now have over $8 billion of power projects under construction, comprising of 10 power plants, totaling 8,070 megawatts and the transmission line at Mahan. Of these, 3 are due on stream in 2011, which will add 2,910 megawatt to our current capacity of 1,600 megawatt. We have Slaya 1 due in Q3, Mahan 1 due in Q4, and Vadinar Phase 2 also due in Q4. We have moved the target dates for completion of these 3 projects back by a quarter from their original schedule. But given the current progress, we are confident that we will deliver to these revised dates. We are waiting for approvals from the Indian government to develop mining operations at our coal blocks, which we will use to fuel power station. But we are optimistic that these will be cleared in the near term. In the interim, we have plans in place to source temporary coal supplies to supply the power stations. There are now only 2 remaining power projects still in developmental, awaiting the go-ahead. These projects will also be moved into the construction phase once we have tied up coal supplies and funding. Assuming all this goes ahead as planned, by the end of 2014, we'll have 11,470 megawatt operational altogether in our power portfolio. Moving on to the exploration production. Here, the Raniganj coal bed methane project in eastern India is now producing 30,000 standard cubic meters a day of gas from 19 wells. We expect Raniganj to reach peak production of 3.5 million standard cubic meters a day from 500 wells during 2014. In 2010, Essar Energy signed production sharing contracts for 4 other new coal bed methane gas blocks and now has the largest CBM acreage in India with 10 trillion cubic feet of gas resources in total. In refining and marketing, the Vadinar Phase 1 refinery project is on track for mechanical completion during Q2 and Q3 this year. Production from the new units will then ramp up during the second half of the year, taking us from 300,000 barrels per day now to 370,000 barrels per day. More importantly, the Phase 1 project will also increase the complexity at refinery to 11.8 from 6.1 currently. This increased complexity is important. It brings with it an increased capability to process ultra heavy and heavy crude oils, supplies of which we are seeking to lock in from around the world. And it allows us to produce a higher proportion of middle and light distillates. Beyond Phase 1, we will also complete the optimization project at the refinery to take throughput to 20 million tons per annum or around 405,000 barrels a day by September 2012.
It is very important for any company to have a clear strategy so that our shareholders and other stakeholders know what to expect. Essar Energy's strategy is very clear. It is to create a low-cost, integrated energy company to capitalize on India's rapidly growing energy demand. This strategy is underpinned by our world-class Vadinar refinery, a significant portfolio of power generation projects, and the commercialization of our upstream exploration and production portfolio. We are focused on India, but will also look at assets outside of India where they support our core strategy and deliver value to shareholders. For example, we are currently in the process of buying the Stanlow refinery in the UK from Shell. In the upstream portion of our business, we may also look for additional resources outside of India, both in E&P and in coal, where India lacks sufficient natural resources to service its needs. This would involve securing raw materials either for direct input to our assets, for example, with the coal assets we have in Indonesia and Mozambique, or as a natural hedge for our raw material inputs, particularly our crude oil requirements at the Vadina refinery. In power again, we are focused on delivering our existing projects in India, but we may at some stage in the future also look at power generation opportunities in emerging markets, where we can leverage our skills and get risk-adjusted returns at similar levels to or in excess of those that we can achieve in India. We want to be very clear with our stakeholders on the type of opportunities that we would look at. But again, the focus is and will remain on India and delivering value to our shareholders.
Stanlow acquisition is an interesting new development for Essar Energy. We signed an exclusivity agreement with Shell last month, and we have offered $350 million for the refinery. At present, Shell is going through its usual employee consultation process, and we expect to sign a full asset purchase agreement soon. This will then allow us to complete the transaction during the second half of this year. There are three key points about the Stanlow transaction. It is a high quality, complex and large scale refinery. We are buying at a competitive price compared to the other refinery deals recently. And because it is well located with good tank storage capacity and access to the distribution infrastructure, it helps our strategic aim of having options to export the high grade petroleum products which will be produced at Vadina in future. The key priorities for 2011 are focused around the completion of those projects which are due to be finished during the year and to continued progress on all others. This is the key to us delivering market leading growth for all our stakeholders. The key projects which will be completed in 2011 are the Phase 1 refinery expansion at Vadina, and in power, the Mahan 1, Salaya 1 and Vadina P2 power projects. These projects will all be major contributor to our cash flows and profitability, and therefore remain our top priority. We are in sight of finishing line and confident that they will all be completed this year. Next priority is coal. We remain optimistic of receiving the necessary clearances for our coal blocks in both India and Indonesia, which will provide the fuel for our power stations and are ready to move forward with their development as soon as possible. We also have in place plans to secure temporary coal supplies in India and from the international market so that we can generate power from the project's commissioning dates as scheduled. At Raniganj, our coal bed methane gas production project in West Bengal, the ramp up of production is moving forward with 19 wells currently operating, and we expect to commence commercial sales shortly. We'll continue to look at options to increase our reserves of oil and gas both in India and internationally, and to secure additional supplies of heavier crudes for use at Vadina as complexity increases at the refinery. And finally, we have to complete the acquisition of the Stanlow refinery and commence the integration of that asset into Essar Energy.